Morning, everybody. Hope you guys are doing well. Sent out the daily bias. Posted up. Obviously, was favoring the market maker buy model to be completed on the 15-minute chart. Already got it right there. First 5 minutes or so, 3 minutes. So now we could either react off of this, turn into discount this IRL down here, or obviously we just continue to climb and make further all-time highs. So you don't want to pick tops up here, but if we get SMT between the two, and obviously a lower time frame market structure shift, then you can look at it. Now this is pretty substantial SMT, I would say, right? Here's your London high all the way up here. So session ERL SMT is always a good sign. And then discount, since ES is weaker, meaning we didn't come up and sweep the buy side at all. This is the one that you'd want to see wilt lower quickly. So potentially even go for previous day low from Tuesday. I'm going to mark that out really quickly. That's a form of sell side. Obviously, you came from premium too. And then NQ, I would favor just running into some sort of a discount imbalance or an ERL within just a short-term discount here. So you can measure that out. Over here, we obviously have PM session low that we got one tick. This is kind of light, actually. Let me see if I can darken this. That's a little bit better. PM session low there. And then we got within one tick of it. So relative equal lows, source of liquidity. Obviously we have gap down here too, but I would favor this being ran out and then previous day low being ran out if we want to reverse. If not, and we want to continue, we'll just take it as it is and use fib measurements to take profits, or even just like 20, 40 point partials, the normal stuff. So whenever you get all-time highs, which is, I guess, rare, but you can use fib measurements from the breaker. So you want to drop to whatever time frame you see the breaker on, which in here you can see the low, high, lower, low, and the market maker buy model. Drop your fib from the high to the low. And then you can use your standard deviation targets 2 to 2.5, as well as the 4. I just like taking pointed partials. So 20, 40, 60, things like that. Once again, nice little 227 to 933 soup macro. Bisi there in discount, shout out to the buy side. I guess you can also see the low resistance sell side liquidity. Let me screenshot this first. Low resistance sell side liquidity on the way up. Type this up. There we go. So sell side here, not purged. Sell side here, you have one sell side. So this is your current dealing range, but pretty equal sell side. Now the reason, if you go to the 15-minute chart, that I drew the bisi from here is because this is all efficiently filled. If you draw it from here, normally you're not going to get a reaction, right? If we're going to sink lower and fill the unfilled portion, you're not going to get a reaction off of this upper portion that was completely filled, right? This is all, and even on the lower time frame, it doesn't make sense for us to just bounce here sometimes. So you want to see it move lower, and then you can get a reaction out of the unfilled portion now. So that's why I've dragged it to here. It's also in discount of this dealing range here. RTH gap, we probably have opened a larger one, which is not too large. I wouldn't worry too much about that. I mean, even here, you could look from yesterday's price action on the RTH. This is extremely low resistance. Original consolidation down here. If you want to use that. And it looks pretty smooth to start moving lower. So wait for the ATM model, as always. Already got the SMT. Let me screenshot this. Yeah, already got the SMT. Need the 5-minute candle to print bearishly either at 945 or at 950. Obviously, also want to disrespect these bullish PD arrays. So if we flip this to inversion, then you have a breaker in here. Also, never mind. 924 root. So potential future breaker right here. Watch to see if we close below it. Now, the reason it could go from quote unquote ERL to ERL today, meaning PM session, sorry, London session to PM session, is because that PM session is within a larger time frame dealing range discount. So if you look between here and here on the hourly, forget all these annotations. Let me just go to NQ actually. From here to here, this is now your discount. If you look at the 15-minute chart, we do have some imbalances in sell side below that. So for us to reach into the sell side and past would make sense. It's not going to just, normally it's not going to tap right into here unless we're extremely bullish and want to continue up. What do you think about the news? I think we only have PM session news today, right? I believe, yeah. So it's minutes. If you trade the PM session, you'll have a little bit of volatility, nothing compared to regular FOMC. It normally, with minutes, it doesn't create any crazy volatility. So you can probably just trade normally on the AM session. I'm not too worried about the news at all. Potential mitigation block up here. I'm gonna see how this is used. So like I said in the market maker model video from last week or 2 weeks ago, 930 will start somewhere in the market maker model, right? So here 930 completed the market maker buy model. So in this case, whenever we're completing one, it'll start in the second stage of distribution or second stage of accumulation. So shortly after, you want to see the reversal and the Judas swing ending near 9:45, 10 o'clock sometimes, and will lower from there. Other times it'll start right at the smart money reversal, right at 9:30. Either way, you're not going to miss the first 15 minutes. Normally are good to just sit out unless you're in before 9:30, just because you can have different false moves and it's not as clear because it's kind of the Judas swing will end at 9:45. So we're closing through the bisi, through the breaker. So you wanted to see this was eventually used as inversion. Actually, wasn't even used as inversion, it was just traded through completely. Above 830 would be premium. So preferably shorting above there. If you continue to get this kind of reaction. So I want to see the breaker hold. Now, I guess this is technically counter bias or counter higher time frame trend. So normally when you have, yeah, it does need to come to premium for the breaker. So we got a fair value up here. This is still a little too early for me. But fair value up in breaker does need to come all the way up into premium. What was it saying? It is technically counter bias, right? Like you don't want to be picking tops. So it's good most times to scalp or have quick take profits when you have counter biased ideas intraday. If you're with the higher time frame order flow, obviously you can hold it longer normally and keep a larger risk. You don't have to worry about trimming stop as much as seen from yesterday. But I mean, if you get everything that's needed for reversal, like we're wicking the buy side, we got SMT, I wouldn't feel uncomfortable, at least holding it down to PM session low. It is somewhat of a smaller range. It's only 40 points. So risk, maybe a little bit smaller or a little bit larger today, depending on whatever your tolerance is. Like if you were to put a stop above the order block, it's only 10 points. So far, first reaction was nice. Let's take a look what ES is doing. Still holding the SMT so far between these two. Now, with YM popping up aggressively and DXY trading off, I'm somewhat concerned that ES will start to climb up for their London high, and so will NASDAQ. That continue to move up. So we still got to be careful. Look at the reaction off of this portion. There you go. Trim the IRL. Reacted off that. Where the wicks are. So I'm not counting the wicks as efficient price delivery. There you go. We're already closing through the breaker. Nice. 25 points on my fourth eval looking to pass. Total super entry once we see on the wick. So stop loss low. Good stuff. So we close all the way through the breaker. Flip this as inversion. That's why it's good to, if you can, monitor these four together. Because sometimes just looking at the one chart is a little bit difficult. Once you get comfortable with looking for SMT and looking for things like this, I think it's a little bit easier. Now it is still in premium. Here's our first 15-minute candle printing. Let me remove some of these annotations. So far, still bearish SMT between the highs. Yes, to not even get close to their London high, all the way up here. You got a premium inefficiency here on YM. And, DXY still has to flip. I don't know what the bias is on DXY. Let's go to DXY quickly. I'm still favoring lower prices, I think. At least for the short term. Got stack liquidity down here. We'll see. We need to close through this order block. I'm going to put a alarm down here. But flipping this as inversion and closing all the way through this order block is of concern to me. Obviously, if we take out this high, I would trust that we can look for longs. Keep this as low of the session than target time. All right, 10:30 to 11 o'clock. Yesterday, we had the end stream effect. Eventually, we got the buy side ran through. What time? 11:23. And we got this buy side too. Definitely a rough day yesterday. We're probably gonna have a rough, not super rough day. I mean, it's already kind of difficult. I think even the first 15 minutes, it's not holding the Peter as you want. What days do we have news? Thursday, Friday should be good. 8:30 news and 10 a.m. news. I'm also watching this 8:30 open price. So look how we dropped into discount relative to the 8:30. So anything above 8:30 is your New York open. So you can treat this just like midnight. So if we are dropping right below the 8:30, wicking it, and then starting to move up aggressively, it's wanting to, the way I read it is it's dropping short-term discount to either accumulate more longs or offset their short-term shorts. And then it wants to push up even further. So the way you confirm that is by CISDs and inversion levels. So there's 1, 2 with the inversion. 3 be closing. I think there might be a 2-minute sibi here. Nope. Bullish order block here is starting to hold. You see the 5-minute candles too starting to print up. So I'd favor if this 945 candle is aggressive, form some sort of a imbalance on the premium end, and it would technically not need to seek discount since we already have a low, high, lower low. So if we form a breaker on top of this, it'd be the last up closing candle, for value up here or something, and then like that, and then targeting time. Even on the 5-minute, look how bullish this order flow looks. Filling this gap, wicking a little bit past it, taking the stops. But look at this order block here on 905 holding, and this 935 candle also printing extremely bullishly above there. So this would be, I would look at this as a propulsion block. Especially if we close above it, tap back into it. 50% of this range should not be taken. That's also lines up with the 1-minute breaker. Targeting time, meaning, yeah, preferably we want to get out at time. It'll always be like that. That's like the optimal way you want to get out. Obviously, there's nothing wrong with targeting price too. So there's no inefficiencies so far on this 5-minute candle printing up. We have a 2-minute gap starting to form. But now we can, I would assume that this low is going to stay intact. Let me switch this. We'll just say low. And we continue to make new highs. Now you want to see the SMT at the lows as well. See if you got any SMT there. $6.15. We do have bullish SMT between the 630, if you go to the 15-minute chart, the 630 low and the 8 o'clock low on the 15-minute chart between ES and NASDAQ. I guess we also do have some SMT between 9 o'clock and 9:30. So that, I mean, short-term SMT, 9 o'clock, 9:30. Probably fine on the 5-minute chart too. This low is your SMT. Yes. So London high, favoring. Watch this high get pierced too. Still no fair value gap. Or within macro time. Why is my indicator not working? It is what it is. Guess you could use the implied fair value gap here. There's your high pierced. Yo, what up? I was tempted today. Not gonna lie. My finger was over the buy button. Just give me some time. You're below the 9 o'clock open at 9:27 and at 9:28. Drop into the discount fair value gap. It was there. I saw it. Let me actually reload this. Oh, the sell. I didn't even see the sell. Do a 4-minute gap. Still nothing on the 1. Kind of just efficient price delivery all the way up. I would look at this as a breaker. Gonna remove some of this other stuff. SMT here. There's a tiny volume bounce there, I guess. Yeah, you're right. And the bullish order block. Still no ES gap. Fib measurement. Let's take a look. Up to 18,860. Good 50 points away. Even on the fib. Let me look at the 15 fib. 37. 18,837. I like that daily range better. So we got the bullish order block here. We got the breaker. I would like to see both those hold. Oh, we do have a fair value up right here in discount, short-term discount. And I'm also liking the dealing range measurement up to 2.5. Where's my 11 o'clock? So if we could hit this level, it's not too far away. 37 is less than 20 points. I want to see this flip as inversion too. DXY also needs to move lower. Let's take a look at the 5-minute. Still pretty clean. We got the market maker sell model at least up until here. Holding the bearish PD raise quite well. Got a sibi here. I prefer if this is also flipped to an inversion gap. $18.60. This would be your best case scenario. So targeting both time and price. Think of it as like a crosshair. So buy side and sell side are just in price. That's why session liquidity pools are extremely important to true ERLs. The one setup for life video, if you haven't watched that, is extremely, extremely important, especially if you compare it with the 2022 model. I think if you watch the 2022 model and then watch the one setup for life video, that is probably the only 42 videos you ever have to watch from ICT, arguably. Obviously, you could probably supplement that with more core content stuff, but if you had to just pick less than 50 videos, I would say 2022 and then one setup for life, and you have a go-to model. So trade it through here. I also wanted to take out this high and close above, obviously, that range. Another CISD. Move this 830 open. It does kind of look like a trend day, though, at least so far. Bottom and bounce there. $62 looks good, brother. Oh, 62 people. Oh, Thank you, sir. Make sure ES is moving up too. We got a bullish order block here. Even on the ES though, take a look at how barcodey price action looks like, with just wicks and kind of printing very candle body. Like it looks very barcodey. If you go to another session or another day, I mean, this is even worse. But you got to be careful. I'm going to put an alarm up here. This is another example where if ES was to take out the London high, that should also be a partial opportunity on NASDAQ. Okay, just in case you want to see SMT form at the highs for whatever reason. If we want to trade up and ES takes their London high, which I don't know how far that is actually. From here, 5 points. So 20 points around on NASDAQ. More or less the same thing we always do. So about to hit 10 o'clock too. So first opening range there. Put in. Look how we also filled above this entire gap. So clearing outside the lines there, it's still a bullish indication. So it's something like this can happen, right? We don't flip the inversion immediately. Instead, we just show a bullish closure through the gap all the way to the premium end, and then we can continue up. So now you want to see the low or the high put in between 9:30 and 10. Obviously, I would favor if this is the low. We don't touch this again. And the high being put in over here. Standard open, high, low, close, right? Open 9:30, even 8:30 if you wanted to use that. Low, high, close. And all of these can be both time and price. So opening price, opening time, closing price, closing time, low, high. So I like to see a closure above here. Then there's a short-term breaker. Now, inversion gaps can technically form intermediate-term lows and highs. I'm not going to use it here. This is the kind of day where, like yesterday, I'm not going to probably trim stop too quickly, or you shouldn't look to trim stop too quickly. Just let it ride. Accept the risk. This is a little sketch. Right at 10 a.m. wicking the high, coming back down. I mean, DXY is looking healthy still. Can measure this dealing range out. Now, the reason I'm not pulling from London lows because this is still a salsa liquidity pool. So we did drop in a discount. Filling an efficiency here. Tiny one. Now, I'd feel comfortable if it continued to climb past 10:04. 5 minutes off of 10 o'clock normally confirms that we've put in the high and low. There's some variance you have to allow by about 1 to 4 minutes, I would say. Bullish order block in here too, starting to hold. Right from the VI though, 20 would be right around, was it 18 or 0.5. We also could short-term sweep this sell side here. I move this. There's some relative equal lows. If you want to pierce that one time and then move back up, that's fine. Still chopping within the range and within the IFG and breaker. I mean, so far, okay, now look at the 5 minute. We've closed this as a potential propulsion block. It's not really above this candle range, so I guess I wouldn't really count that as a propulsion. But look at the 935 order block. That's what I'm more concerned with. So this should hold price, lower time frame, we get the breaker there. All that is pretty supportive. So like if we were to ever touch the low end of the 935 candle, I would invalidate that as a long opportunity, right? We have this inefficiency, but we also place this order block on top of it. So stop should be below the 935 low, which would also basically accommodate this gap, all these gaps being filled. Definitely slow day too. Ranges are not super wide. Just got to be patient. And sometimes it's annoying because you got to be patient for a loss, which that'll spark up some emotions sometimes. But trading is one of those things where you can do everything right and still lose or still feel pain, which is extremely uncomfortable if you're not used to that. But it's all about seeing the long-term perspective over the short-term perspective. So if you're always trading of like, oh, I can reset my eval, or I can do this again tomorrow, or I'm gonna fix it tomorrow or next week, you'll always think that until you change your mindset. So you either have to change your mindset early and think, okay, I'm just gonna stop making the same mistakes that I've always made, or you're gonna just keep doing them and eventually come to the same conclusion further down the line. But that comes with addressing your problems is also identifying the root problem. So a lot of it is fear. I would say sometimes 60% to 70% of your over trading or over leveraging is directly associated to fear. That could be, and most of those fears are irrational. A lot of them are a fear of I'm not good enough, so that's like fear of like a lack of confidence. So you don't feel like you're good enough, or you're reading the market wrong, or there's too many PD rays that are against your bias, so you may be wrong. It could be just a fear of you want to do it too quick, like you're not gonna have time, which is a really, really, when you think about it, the root problem, it's really irrational. Like I feel like a lot of people in the beginning, or even if you're seasoned, you'll have this fear that like there's not enough time. Like you want to pass the eval in 2 weeks, and you have to rush to get it done, because then when you get funded and you hit a payout, it'll all be different, which in reality, it's not true. You have to think like that before you even get to that stage. Your own body and your self-limits, so your self-beliefs will limit how far you can get in this. So figure out what the root fear is, the root cause, and then address it, write it down, logically think about why it's irrational, and then move towards fixing it, finding solutions to the problem. So I would like to see this. We do have a tiny breaker in here if we can close above that. But order block still holding, inversion gap still being traded above, which is a good sign. Now, like I said, that 10 o'clock candle being a wick above the buy side is somewhat still concerning, especially since we haven't taken it out yet. So if you want to drop in these for value ups, it's fine. Anything really past that, I'm not too concerned with. It will also be a short-term discount. You want to draw the 5-minute gap over, you can too. Let me clean some of this stuff up. Let me just draw this out too. So short-term discount there between this dealing range, low and high. Still kind of skeptical. We've just been in this choppy range. Like I said, you could see a sweep of this low, and that's fine. Turtle sweep it. And then go. But you want to see a quick reaction off the turtle sweep. This wick is a good sign. right? We're just wicking these for value gaps, wicking the turtle soup. I'd prefer if this candle closes above the entirety of this candle. Like if we get a nice green candle, or blue candle, I guess, then should still be fine. Then you could look to trim stop to here once we get form a short-term low on this side of the chart, right? That'll be an intermediate term low. Also filling a gap. Talking about me right now. I had beautiful weeks before, and last week was red, and all the bad habits that I thought I'd overcame came back creeping and messing with me even more. Yeah, it's difficult because then sometimes there'll be new problems that arise, and sometimes it's related to drawdown. Like you'll be in drawdown, take a loss, maybe 2 losses in a day, and then you think that everything's broken, which in reality is just you have bad variance. There's always going to be some aspect of trading that you can't control. Whether we did wick the high, we didn't get a thick candle. There's always some aspect of trading that you can't control, which is really hard, especially for ICT traders thinking that, oh yeah, you know the algorithm, but there's always going to be some variance. When you're trading retail concepts, you always understand, okay, I can lose because there could be more buyers or sellers. And it's always like, you can put it on something else besides the algorithm, and you don't have to take full responsibility. That's why I think ICT trading is difficult more psychologically, but you offset that with very precise actual tape reading skills. So it's a balance you have to weigh. Retail concepts obviously are not going to be as precise, nowhere near as precise, but then they have an easier, I think, psychological curve to get over. What I don't like at the fact is that we're trading on the low end of this breaker now and bumping up against it, and we still didn't get that nice candle to overtake the turtle soup low. Let me actually go to the 5. This is a choppy day. Definitely test your patience. Is there a 2-minute gap there? Nope. Let's take a look at what the rest are doing. So ES is kind of trading lower. We do have a 5-minute gap there. Same thing with Y, and we just wicked the 5-minute gap in here. I want DXY to obviously quickly, preferably, trade off of this sibi, start moving lower. That's the thing that's going to hold us up for now. Yeah, it is definitely testing the mental capital and the capacity for the capital too. Like I said yesterday, though, being in a position when there's consolidation will burn your capital extremely quick. So if you're in a position and it's a lot of chop and you take a stop loss, stop out, or a take profit, it's 9 times out of 10 best to just leave it. Like whatever you get as a result of the consolidation, whether it's a stop out or a take profit, you got to just leave it, because a lot of times you closing out beforehand or you moving your take profit tighter so it can get filled, all of that was the best decision at the time, right? So if you make the best decision at the right time of, okay, I think I should close out here, I think I should move my take profit, and you make that best decision with all the data that you're given, and then it maybe runs further. Like you move your take profit to 20 points, it tags it, and then it goes to your original target. You can't beat yourself up over that because it was the best decision at that time. So you kind of have to be unapologetic in your past actions, because there wasn't enough data to just assume that it's going to go to that profit, and you're doing what you're supposed to be doing and protecting capital. So I think when you can accept the variance and just accept that you make decisions based on what's given to you, there's no problem with it at all. Like yesterday, moving the stop to the intermediate term low, got stopped out, and then it ran all the way another 40 points or something to the profit we had outlined in the morning. It is what it is. Right, made the best decision in trimming the stop to an intermediate term low. Would have done that 10 times out of 10. And there's some variance in that. So there's your find your thick candle. I want it to close. Here's your CISD point now. Still waiting. By the way, if you want to quickly screenshot without having to go out of this and click snapshot, you just do Control-Shift-S if you're on Windows. I don't know what it is on Mac. Profit is profit. That's true. Yeah, look at the 5 minute. The wicks are all over. I agree. Wicking back and forth. But, I mean, the order flow so far, we've been holding this bullish order block with the fair value gap. So far, the bias is still, I would say, in our favor of it reaching up. I would need to see a bullish candle close aggressively above this CISD, though. Technically, this is now an intermediate term low. Fill the gap, short-term low there. Fair value gap right in there. I don't know if you can see it. I'm going to move this breaker. Tiny one. The inversion fair value gap is completely filled multiple times. Candle bodies all closing top to bottom within the range. So besides the wicks, there's nothing inefficient in this range. So the largest wick would be the 10 a.m. wick. If you want to split this in half, you could look for consequent encroachment of that. But I mean, there's no inefficiencies in the true form of FEGs. So you'd like to see speed up through that high, maybe bouncing off 50% of this. But just like wicks are inefficient, candle closures on the wicks are important. So look how this kind of candle closure was below 50% of this wick. Obviously, if we pop up and close like at 75%, same thing as a gap. You can see that as a bullish read instead of a bearish read. Didn't get the closure above the CISD yet. This would technically, it's still a short-term low. So intermediate term low, short-term low, short-term low. I guess you could see this as an intermediate term low if you drop down to a lower time frame. What I just said of wicks being inefficient. So we probably filled a gap in here. Short-term low now over here. So stop trim to there, I guess. Wouldn't be a bad idea. But that's something that you have to like, you can't read that in the beginning and think that. It's something that you have to understand from a higher time frame all the way to a lower time frame, even a lower time frame that you can't see. Like I don't have access to second chart on this plan. I normally just flip over to my trade of 8 and go to seconds chart. But like once you see it enough, you can understand, okay, that kind of makes sense. Like in here, like if you go to this 940 candle, there's a wick, taps the wick and then leaves it. But on the lower time frame, the 1 minute, there's a gap here, wicks it. It's the same thing in here. Wick, fills it, leaves, short-term low. This is now technically an intermediate term low. Oh, there's your closure above the CISD. Obviously looking for AM high now. And for us to close through, I'm going to extend these to the right. We're just wicking it right now. Above 50%. This would also be a short-term breaker, so I've marked it on CISD. There's two definitions of CISD. Technically, you could see this as one too. That's why it's a little bit different. If it confuses you, just use breakers. Don't worry about changing state. Then what's this level at? 18840.75. Then I guess you could fib target this too. Oh, we already got that. 8860 best case. Price is still respecting the 2-minute fair value gap. Oh yeah, you're right. Beautiful there. But the order block too. So far we're closing well on this candle, right? Change in state, breaker, whatever you want to call it, 50% of it should not be violated on a strong breaker. What I'd like to see, preferably if there's SMT between these lows too. Short-term low. Almost. Does YM have it? No. I mean, I guess you could look at that as it's relative equal lows. Pretty close. Reclaim for value gap here. If we don't start spooling the next couple minutes, I mean, I'm not going to close out manually, but probably start looking at it. We'll keep the stream up till 10:40 because yesterday got in the habit of closing right at 10:30 or near 10:30, and as soon as it ends stream, it wants to spool. So we'll let it run. I got in at the VI up here in line with the breaker. Stop was below at 9:42. Now it's trimmed to 10:07. I'll show the screenshot once it gets stopped out or it hits take profit. I mean, I guess I could just show this one. Right in here is what I'm looking at. Just a quick scalp because it's rough PA. No 8:30 news either. So 10:20. We need to start seeing it spool between now and 10:40 preferably. We didn't even get first partial hit by 10:20. So normally when you enter on the macro, you want to see your first partial hit by 10:15 to 10:20. Definitely more delayed here. And if we have this many accumulation of orders, sweep of liquidity, we're going to see an aggressive spool, preferably at 10:30 within this range now. There's no reason for us to consolidate the later portion of the silver bullet, right? We normally consolidate one of the two portions, either the first 30 minutes or last 30 minutes. Sometimes it's not even 30 minutes long. But if we're consolidating here, then you want to see expansion later on. Like if you go to yesterday was pretty similar. Consolidated, I guess we started to move a little bit outside of the range, but we consolidated over here last 30 minutes. Still just shopping in the range. It is weird though. DXY is starting to sink. YM's just popping up. ES is still trading within the 15-minute gap. Tiny volume bounce here. That's really the last line of defense. And I still don't like the fact that we haven't taken out the 10 a.m. high. That would have confirmed that this is the low. But now it's still 50-50. I guess this is also the last bullish order block here too. And take out the intermediate term low. It is what it is. And moving up. They just hunted me today, this week. Typical FOMC minutes. Normally it's not too bad, I would say. We'll let it move. We'll watch it till 10:30, 10:40. But here, if I show you, if we drop down to a 15-second chart. Now you can see this is an intermediate term low. Right over here. So that low that the stop was on the 15-second, you have a short-term low to the left of it, short-term low to the right of it. A lot of times tape read is choppy. It's probably true. I just don't see it as bad as FOMC, the true FOMC. So yeah, I think as we're comparing them, it's worse. But I mean, just in general, it could be bad. Watch him move now. Two times they got wicked out. I mean, look in here though, too. Look at the candle bodies closing below 50% of the wick. It's a rejection block. Can't take this anymore. I mean, at least the biases are right. Just the execution is more difficult this week for sure. Yeah, might as well. End stream, full port longs. Target, same thing. Up 6K on funded now, it's 1K. Using the right position size? We're so back. This is just accumulation for days. Oh, I see. 6K unfunded from the trade. Yeah, yesterday was nice. It wasn't too bad. This is way worse, for sure. You've been in what, like a 40-point range? It's tough. Now we're getting a wick on ES. Somehow YM is the cleanest one today. Targeting London high up here. But just wicks back and forth like someone said on the 5 minutes. A mess. Morning session. I mean, if it's this messy, then you could, I guess, assume there's a lot of volatility coming in right in the PM. Ugh. I mean, losses are small. Like yesterday and today, total less than, I think, yeah, less than 20 points in stops on 2 days. So literally could make that back and more on 1/8/30 news day. So shouldn't be freaked out. If you got stopped out either before me or after me, or if you're still in the trade, it doesn't matter. If it comes and stops out, it's like such a small price to pay. We'll see tomorrow. Hopefully it does. We'll see. Still trying to recover drawdown. Last 2 weeks been terrible for me, but loss has been small. That's good. Yeah, and what you could do is, as well as if you're taking substantial losses, so like this kind of movement here, this is pretty, yeah, there you go. So I would be very concerned that we're going to go for AM low now. But once you start taking consecutive losses, what you could do is just drop position size, either 50% or like whatever your low probability day is. That way you don't get emotional and you're more worried about the execution It'll take longer to get the drawdown back, but then you're focused on the proper way of getting it back than over leveraging or over trading. But slowly reaching the drawdown, think of it as like a slingshot. So ICT says. So if you're in drawdown, it's like you're just pulling back the slingshot and you'll shoot back the same equity high you were at beforehand. But you have to do it the proper way. So 2 days of losing, normally we don't see that. Or at least normally I don't take 2 days of losses. But still tomorrow we're going to execute the same way. Probably be more selective the rest of the week with the setups. Actually, I guess Monday was green too. So basically flat on the week. That execution is posted in YouTube vids as well. The same kind of price action in here. We have a breaker forming, but we'll just probably wick the breaker and move out of that. Last 2 weeks humbled me. I respect that. Yeah, last week was difficult. As we get further into the summer, you got to be more selective of, like as we approach August, be very selective with the days and the trades you take. Don't feel rushed and don't feel like you have to take one every day just because it's there and the market is open. You don't get paid to take the trades. You get paid to execute. Yeah, the start of May was fantastic. April, I think, was probably the best we've had in, like, April's price action was probably the best price action we've had since maybe last September or October. It was perfect. Here's your 1030. We still have not taken out any of the AM high or low. Yeah. Any red folder news days in the morning. 10 a.m. news. 8:30 is my favorite. Like if you're going to look at it, 8:30, 10 a.m. This is the top two. You want really high volatility, NFP, post CPI. And then obviously non-news days with no news the next day. So today we have 8:30. We have 8:30 news tomorrow, right? So today, that's the thing that's more affecting price action than I think FOMC minutes is. Yesterday, why do we have good price action? Because if you pull up, I'm going to pull up the economic calendar for you. I'll post it in here. I'll put it over here. So Monday, normally don't want to trade. Tuesday, we have no news with no news the next day. No 8:30 news the next day. So you can look to trade Tuesday. Wednesday, we don't have 8:30 news, but we have 8:30 news the next day. Don't look at Wednesday. Thursday, 8:30 news. Friday, 10 a.m. news. So like optimally this week, Tuesday, Thursday, Friday is what you look at. If we look at a different week, go back to like that's the way I look at it. Something like this. This was last week. So optimally Monday, obviously it's a Monday, plus we have 8:30 news the next day, so no go. Tuesday, solid. You have Fed chair speaking. That's normally kind of difficult. But potentially Tuesday, Wednesday for sure, Thursday for sure, Friday for sure. So like that week you look at Wednesday, Thursday, Friday. I think I covered that in the market maker model video too. Flux, do you think the market moved like this due to pre-earnings? No, I personally don't think it does. Earnings are just like volatility drivers. So they move in tandem with whatever the higher time frame is going to go to. Just like news drivers, right? So news and earnings, same thing. Unless it's like, you know, something random, like a Netflix earning. I don't think Netflix is top 100. I could be wrong. Yep, see you tomorrow. Did the afternoon FOMC red folder have an effect? FOMC, like the actual FOMC where they announced the interest rate, that is a huge effect on the morning session and even the day before sometimes. Minutes normally does not. Obviously today it is a little evident, but I would more associate with this with the 8:30 news that we have tomorrow. But I mean, either way, it's you get two different questions with the same answer. So here's 10:30, still stuck in the range. I'm gonna do everyone a favor and end stream, and we'll see it move approximately 7 minutes after. So we'll wrap it up there. Stream recording will be posted later today. If you got any questions, obviously shoot me a DM. A little bit backed up, but I'll respond by the end of today. Appreciate you guys joining. Hopefully you learned something, and stay solvent, stay rational. If you took a loss, don't try and jump back in and make it back just because you're trading P&L. Took a win, be happy with it and move on. Anyways, take care today. Enjoy it. And I will see you guys tomorrow. Peace. We'll leave the stream recording up till 10:40 just to see it spool.